Hello and welcome to this edition of Money in Motion video blog. This is Dan Perkins, and this was recorded on Friday morning, August the 1st, after a 327-point drop in the market on yesterday. We have a lot of things to talk about today, so let's get started. First, I want to start with a review of our indicators and see how they've done over the last 30 days. As you may recall from previous blogs, we have had three indicators: the price of crude oil, the price of the 10-year Treasury, and the price of gold. And we've been studying them and watching them for directional changes, which gives us an indication of what's happening in the marketplace, the economy, and what we can expect in the future. So let's take a look at our first one, gold. As you can see from this chart, the price of gold was about $327 an ounce. And now, as of the close of business yesterday, it's $1,282 an ounce, over a decline of 3.4%. I'm sure you've all heard the commercials where the people are suggesting that gold will go to $2,000 by the end of the year, and silver at $50. I don't think that's going to happen. Now let's turn to the 10-year Treasury. We started July with the yield on the 10-year Treasury at about 2.56. We ended July with the yield on the 10-year Treasury at about 2.57, or 1/100th of 1% move. I find this interesting in that the Federal Reserve has been pumping the markets about the possibility of rate increases sooner, more from members of the Fed as opposed to Janet Yellen, who's still saying she doesn't see us moving until probably sometime in 2015. Now, while we had a good GDP for the second quarter number, which caused a lot of people to begin discussing that the Fed may have to raise interest rates, this morning we got the jobs data was disappointing, and the unemployment rate ticked up to 6.2%. So I think that's a confusing message to the Fed. So I think the Fed is still on hold until at least sometime the latter part of next year. The third component in our triangle is the price of oil. The price of oil at the beginning of July was $104.04 a barrel, and it finished yesterday at $97.95, down almost 6% for the month. This is a combination of changing elements of the risk premium for terrorism, and the belief that things are going to stabilize more. Also, it may be an indication of decrease in demand, and also an indication that we are moving closer and closer to energy independence, so our need for imported oil will continue to decline. I've seen forecasts from the International Energy Commission that now think that America could become energy independent as early as next year. So I expect to continue to see pressure on oil and natural gas as more of the supply domestic comes on, and we have a less and less demand for imported foreign crude. I've added a new element, and that's the S&P 500 movement. I did it primarily as a reaction to the significant sell-off yesterday. The S&P 500 started the month at 1978 and finished the month at 1930, off just under 3%. Typically, corrections when they come run between 3 and 5, maybe if it's a really bad correction, 7%. And we're down about a little under 3. I would expect maybe a little bit of a relief rally, not very long today. Going into the weekend, people will be a lot more uncomfortable with what's going on, and especially if the market sells off again today, people are going to be thinking about unwinding positions on Monday morning. So next week could be a very volatile week. We could test down 5, and if things get way out of hand, we could test down 7. So we're going to add that to make out a fourth indicator, the Four Horsemen, and we'll look at them on a periodic basis to see how they're doing. What's the important thing when you look at these pictures that I've put on the screen for you, and each of these items, you'll see that there is a trend line, and that the trend lines have been broken dramatically below the 50-day moving average, or 30-day moving averages. And so that indicates a market that's rolling over and is trying to sell off. How deep it will go, well, we won't know until we get there, but I wouldn't be surprised that we couldn't see maybe 5 to 7% which would take us in the neighborhood of 800 to 850 points down on the Dow, and probably in the neighborhood of 190 points down on the S&P 500. So we'll watch those, but you can watch them yourself on a day-to-day basis. I think it's appropriate this first day of the new month for us to talk about the statements that you were about to receive. I think that your expectations, because the market sold off for the month, is that your accounts will be down for the month, and they'll be down in line with that 3% or more of the S&P. I think you're going to be surprised at how stable your accounts were, and in some cases, depending upon the strategy, you may be at all-time highs. You all have received your first 6-month reports, and you've seen how well you did in the first 6 months, outperforming the market by a substantial amount. That is a cushion, so when we have a sell-off like yesterday, we can still produce positive returns for the month. So now I'd like to move to expectations for the markets for the balance of the year. One of the things that doesn't seem like on the surface would have an impact on the capital markets would be the action by the president. There has been some discussion this week that because the House of Representatives failed to pass any legislation to increase the funding to support the efforts at the border, that the president may in fact by the 1st of September, after the congressional recess, issue an executive order to, in essence, give amnesty to 5 million illegal aliens in the United States. I don't know whether he'll do that or not, but the rhetoric seems to be thinking that he will. My concern is that if the president gives conditional amnesty to 5 million illegal aliens, what you're likely to see is a significant pushback, not from the Congress, because I don't believe they want to challenge the president at all, but I think from the American people. I think that from a political standpoint, 5 million amnesties for illegal aliens would create a very, very significant problem for the Democrats in the fall elections. If the president gives conditional amnesty to 5 million illegals in September, I can hopefully expect that the Republicans who are running for re-election or new candidates who are running for election to the House and the Senate will in fact use that as a tool to try and get Democrats to believe that the president's gone too far. By giving conditional amnesty to 5 million illegal aliens, you bring 5 million people more into the workforce legally, and they will all be allowed then to compete for jobs that are here that legal residents are trying to look for. Given that we have a total unemployment rate of somewhere in the neighborhood of 12.6%, went up a little bit this past month, and we have over 93 million unemployed who've given up looking for jobs and have exhausted their benefits. The movement of 5 million people into the legal mainstream is going to put tremendous pressure on competition for jobs. There's going to be a surplus of people, and that's going to put pressure on wages, and it's going to put pressure on the middle income group of our American people. So I think that that the rhetoric, if it's rhetoric that turns into an executive order, could have some very significant backlash. I know that the Democrats have been calling their constituency, saying that if the president uses as an executive order to deal with the immigration problem, that the Republicans are going to try and impeach the president. John Boehner, the Speaker of the House, has indicated, no, we are not going to impeach the president. I don't know whether he could continue to say that if the president, in fact, gives amnesty to 5 million illegal aliens. I find it hard to figure out what the president's agenda is, both on foreign policy and domestic policy. He talks about wanting to get along with Congress, yet he says to them at his State of the Union address, I've got a pen and a phone and I'm going to work around you. Not very a strong spirit of cooperation. The government is clearly critical of what's going on in Israel and the Hamas. The idea that I went back and looked, and from 2004 to 2014, over 30,000 missiles have been launched out of the Gaza Strip into Israel. 2,600, almost 3,000 missiles were launched in the month of July. And there's a huge percentage of the Israeli population that spend more and more time in bunkers. Question it becomes, with what's going on our southern border, if we're attacked from the southern border, will the president respond? I don't know. I clearly wrote an editorial a few weeks ago about the invasion of the 300,000 people that came into the United States illegally through the Mexican border in the period of April 1st to June 30th, 300,000. And of that, 250,000 were classified as adults. But what's more concerning to me is that we have people coming in from Afghanistan, China, Syria, Iraq, that are also coming through the border. So we have an open sieve there that's allowing everybody who wants to come in, and there's not really much support there to stop what's going on. I think that that's where we have the greatest exposure as a nation, is to the hundreds of thousands of people that we're allowing into across the border, and we don't have the resources there to really vet those people before we do anything with them. So it's a big problem. We could have those problems really surface dramatically going into the election, which could create an opportunity for the Republicans to not only get control of the Senate, but very possibly, along with the House, be able to override presidential vetoes. And then I think we're going to have some serious confrontation in the last 2 years of the president's term, even if they don't get a total veto override in the Senate. So all these things are important to how I make decisions. Right now, I'm still believing that getting paid while you wait is the way to go. It has certainly helped us. We have a couple of niche situations with Gilead and with Mankind and with Anley, which have all done extremely well so far this year, and I expect them to continue to do well. So lots of things going on. The markets move up and down. I'm watching it, and I'm trying to protect your assets. If we do have a significant downdraft, I honestly believe that our decline will be much lower than the rest of the market. So as in the past, if you have any questions, please feel free to give me a call. If you have friends or family who's looking for a real money manager, please give him my number. This is Dan Perkins, and thanks for watching.